make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Today's podcast is sponsored by Mint Mobile. Get your new customer offer and your new 3-month unlimited wireless plan for just $15 a month at mintmobile.com/gold. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
The Peter Schiff Show.
Well, I had planned on starting this evening's podcast about 20 minutes ago, and then I found out that Kamala Harris was making a speech, and so I figured I'd watch the speech and then do the podcast so I could comment on anything interesting that she had to say. But unfortunately, she had nothing interesting to say and nothing really worth commenting on. I'm not really sure the purpose of that speech. You know, if you believe the betting odds, she is now a long shot to win the White House. The election is just 1 week away. So you would figure she would try to do something, but she's got nothing. If you look at the betting markets, look at the poly market, Kamala Harris is down to 33.2. That's the lowest I've seen her. If you bet on her and she wins, you triple your money. If you buy Donald Trump, he's 66.8. You only make 50% return if Trump wins, and you triple your money if Harris wins. On Kalshi, the odds are a little bit better. Harris, I think, is 37 cents, and Trump is 63 cents. Obviously, the better place to buy Kamala would be on Polymark, but I don't think Americans could do that. You'd have to go over to Kalshi. But, I would buy Harris because I do think that the odds are going to tighten up. As I mentioned in the last podcast, I think there's a lot going on here. There's a lot of ulterior motives, especially look at Donald Trump's stock. It's up like 40, 50% in the last 2 days. I think a lot of that is following the betting odds. I think people who are long that stock are buying Trump or selling Kamala to try to goose that stock. But I think a lot of those type of bets are going to come to an end when the market closes on election day. And I think it will tighten. I mean, my guess would be Harris will be back above 40 cents, maybe 45 cents. That'd be my guess on election day. So even if you bet her, you don't have to stick it out and risk losing. You could cover and make a 30%, 40% return just by buying her now and selling her when she's a little bit more expensive. But if you want to hold, just, you triple your money if she wins. Now, I've been saying that I thought Trump was going to win since the beginning, since before Biden dropped out. And then after Biden dropped out, when everybody was, rallying around Kamala and she was the greatest thing since sliced bread, I just didn't buy it. I didn't think the public would buy it. I thought Trump was unbeatable. The only reason I think that maybe Kamala now has a shot is because everybody now seems to think Trump is a sure thing. And, markets have a tendency to surprise people. And if everybody thinks Trump is going to win, the contrarian in me gets a little worried that maybe he won't. But we'll see. I mean, with the weakness in the economy, it's really hard to believe there to be any other outcome. In fact, we got fresh economic data today confirming just how weak the economy is. We got the JOLTS report, which is the job openings. And of course, we're going to be getting the big jobs numbers on Friday. That's going to be the last major economic release, I think, before the election. So there'll obviously be a lot of pressure to manipulate that number. So I would expect it to be a good number, at least for the media. But this JOLTS number obviously doesn't get anywhere near the headlines that the unemployment rate or the job numbers get. So there's probably less pressure to manipulate it. And anyway, so this is how many jobs are available, how many jobs are open, employers looking to hire people. So if you have a lot of job openings, that's a sign of a good economy because businesses are doing well. They want to hire more workers, and it's good for workers because there's a lot of jobs to choose from. And that also puts pressure on wages. I mean, how do you attract workers? You offer more money. So if there's a lot of companies competing to hire workers, then you got to pay more money to get the one that you want. Anyway, the consensus forecast was for 7.9 million job openings, which would have been a slight decrease from the 8.04 million reported the prior month. Well, the prior month was revised down to 7.861 million. And the September number that we just got came in at 7.443 million, way below the lowest estimate because the range was 7.8 to 8. In fact, this number is so low. This is the fewest number of jobs opened since January of 2021. Now, what else happened in January of 2021? That's when Biden was sworn in as president. That's when Kamala Harris was sworn in as vice president. And as measured by JOLTS, the job market now, or in September, because it could be even worse now, but as of September, the job market was the weakest it's been in the entirety of the Biden presidency and the Harris vice presidency. So given that grim reality, and hey, they're going to whitewash this all they can and try to pretend we've got this strong economy, but these statistics reveal the truth, and that's why voters don't want to buy 4 more years, which is what they're going to get. As much as Harris wants to pretend that she's an agent of change, she's a continuation of what we got, especially when every time she's asked, well, did Biden do anything that you would change? No, I can't think of anything. So she wouldn't do anything different than the guy that's there. So what's the point of reelecting her if you want something to change? By her own admission, nothing will change if you elect her. So the only possible change is Trump, which ironically, I think is behind the surge in consumer confidence. We got the consumer confidence number that came out today, October, blew away estimates. They were looking for 99.1. We got 108.7. Now, why would consumers be so confident when the data is so bad? I think it's because October is the month where Trump really started to shoot up in the betting markets, in the polls, and where all the media coverage is now conceding that he might win. And I think the reason that people are now optimistic in an otherwise gloomy economy is because they think it's going to change with Trump. This consumer confidence number is the highest it's been since March of 2021. So that was 2 months after Harris and Biden took office. This is the most confident consumers have been in over 3 years. And that's because they think they're about to leave office. That's why they're confident, right? It's because they think that things are going to change with Trump. Now, unfortunately, they're going to get worse, and that's going to be part of the disappointment, but they don't know that, right? I mean, they think that he's going to make America great again, or at least make it better than it is now. But one piece of economic data that came out today that is actually, I think, the worst piece of economic data that got absolutely no media coverage, as it normally doesn't, and that was the trade deficit. And this is the merchandise trade deficit, which is the important one, because it just focuses on goods, right, which are manufactured. And of course, Biden is claiming that he's the manufacturing president, that there's been a renaissance in manufacturing, which is what they claim. Everybody claims that. Trump made the same claim. That wasn't true. But obviously, if you want to have a scorecard of manufacturing, let's take a look at the merchandise trade surplus, because we're looking at, stuff, right? Not services, but stuff that's produced, manufactured. They were looking for a deficit of 95.8 billion. Of course, they're always looking for a deficit. The numbers are never a surplus. So they're looking for a deficit of 95.8 billion, which would have been a little worse than the 94.3 billion from August. Well, that number was revised slightly lower, so 94.2, pretty much the same. But the September number came out at $108.2 billion. That is not only way above estimates, but it is the second highest trade deficit in history. The only trade deficit, the only month where we had a worse trade deficit, merchandise trade deficit, than the one that we just clocked in was in March of 2022, when it was a staggering 120 billion. Now, that was an aberration, because what happened in March of 2022 was that was the beginning of the reopening. The economy had been shut down for COVID, and so the ports weren't operating. The workers weren't there. They were quarantined at home. And in March, right, that's when we reopened and all that stuff came in. And so that was an aberration. That was actually more than 1 month. It was just squished into 1 month because of the circumstances. And even the next several months were big numbers, north of 100 billion. But none of those months, even though they were still extra big under those circumstances, this month that we just had, with no extenuating circumstances, this is just an average run-of-the-mill month. There's nothing going on, right? And we had a bigger deficit than in April or May of 2022, when they were still artificially impacted by the economic reopening. So this tells you that the American economy has never really been this screwed up. We've never been this dependent on foreign producers than we are right now. We've never been more dependent on the dollar's role as a reserve currency. What enables us to afford to import $108.2 billion worth of stuff in 1 month? It's the dollar's reserve status. We pay for all this stuff with the money that we create out of thin air. If we couldn't do that, if we had to balance our trade like a normal nation, if we had to pay for these imports with exports, we couldn't do it. And so the goods wouldn't be coming in. A lot of people still get it backwards. They still think the foreigners are dependent on us because we're their best customers. We're buying all their goods. We're not their best customers. We're their deadbeat customers. They're loaning us the money to buy their stuff. They're vendor financing a deadbeat customer who's never going to pay them back. So we're everybody's worst customer. And again, the hard part is producing. The easy part is consuming. The fun part is consuming. And there's nothing that says that the Chinese or everybody else, if they didn't sell their goods to us, they're not just going to dump them in the Pacific Ocean. They've got plenty of consumers. They got more than we do. They're going to buy the stuff that we don't buy. Why do we buy it now? Well, we're outbidding them with their own money because we're using our overvalued dollars to outbid them for the stuff that they make. But when the dollar collapses, we won't be able to afford to do that anymore. They'll be the high bidders and they'll get to keep the stuff, which is a much better deal for them. They produce the stuff and then they get to enjoy consuming the stuff. In America, we lose that. We produce nothing. We consume nothing. We just print money and create inflation. So this is a terrible economic report. Obviously, the biggest trade deficit of the Biden presidency, other than that one-off month from COVID. So the jobs market has never been weaker, and the economy has never been really weaker or more dysfunctional, that we've never been more dependent on the productivity of the rest of the world. So in this environment of a weak economy, you would think it'd be very hard for Harris to get reelected. And in fact, the markets now too aren't even reacting really to the weak economic data, because most people assume that it's going to change. The assumption now is Trump's going to win, so we can ignore all this weak economic data because the economy is going to improve when we have a change of leadership. Anyway, we got a quick commercial. We'll be coming right back, so don't go anywhere.
I love a great deal as much as the next guy, but it has to be easy. No hoops, no BS. So when Mint Mobile said it was easy to get wireless for $15 a month with the purchase of a 3-month plan, I called them on it. Turns out it really is that easy to get wireless for $15 a month. It's time to switch to Mint Mobile today and enjoy unlimited talk, text, and data for just $15 a month. In fact, when it was time to get my son Preston his own phone, Mint Mobile was the perfect choice. Forget about the steep monthly fees and overages that you get with your current wireless plan and make the switch to Mint Mobile's premium wireless plans, starting at just $15 a month. Choose any Mint Mobile plan, which includes high-speed data with unlimited talk and text on the nation's largest 5G network. You can even keep your current phone and number when you switch and bring over all your existing contracts. Ditch overpriced wireless with Mint Mobile's limited time deal and get 3 months of premium wireless service for $15 a month. To get this new customer offer and your new 3-month unlimited wireless plan for just $15 a month, go to mintmobile.com/gold. That's mintmobile.com/gold. Cut your wireless bill to $15 a month at mintmobile.com/gold. $45 upfront payment required, equivalent to $15 a month. New customers on the first 3-month plan only. Speed slower above 40 gigabytes on unlimited plans. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
You know, another thing about this election, when you listen to the media and all of the surrogates on both sides, you would think, okay, you know, number one, they say this is the most important election of our lifetimes, which seems to happen every 4 years. I mean, you go back to the last, several elections, and I recall everybody saying the same thing. Although I think the rhetoric has been turned up several notches this time as far as the stakes, right? Because if you listen to what the Democrats say, if we elect Trump, that's basically the end. I mean, not only is democracy over, the Constitution is going to be shredded. He's a fascist dictator, who's going to rule like Adolf Hitler, right? This is the extremes that they're saying on Trump, how bad it's going to be. But, the Republicans are the same way. I mean, if Trump loses, this is the last election. They're going to flood the country with illegals. We'll never elect another Republican because all those illegals are going to be voting for Democrats. And so both sides are framing this as do or die. Like if our side loses, that's it, right? You might as well, leave. It's the end of the country, right? And I don't believe that. I mean, I think I've never believed that. I think one of the reasons too that they have to make it like this, like it's such a huge difference between good versus evil, is because they agree on so much more than they disagree. Nobody wants to cut Social Security. No one wants to cut any entitlements. Nobody wants to cut military spending. Nobody really wants to get the government out of a lot of the parts of the economy that it is now entrenched. I mean, Trump will talk a bit about making government smaller, but he's talking about the edges. And, so nobody, they can't really argue about the substantive issues that face us, the looming debt crisis and currency crisis, because nobody wants to do anything about that. So they have to find a way to contrast themselves. And so it's just how evil and horrible my opponent is. And if my opponent wins, it's complete economic Armageddon. And, but Trump, when I hear all the people talk about how great this economy is, how this economy is going to boom, all we have to do is elect Trump. And, I know that that's good for votes, but I know that that's laying a very dangerous situation of expectations being very high and then not being met. I mean, not only are they not going to be met, we are on the brink of, a major collapse. I mean, that's the only reason that I wouldn't necessarily be completely unhappy if Harris won. I mean, I'd rather Trump win, and I've encouraged my supporters to vote for Trump. Although I think Harris is better for my business, better for my gold business, and she can't raise my taxes because I'm here in Puerto Rico. But as an American, I think, I still think Trump is better. So I always tell people to do what's best for the country, not what's best for my personal finances. But they're saying that if Trump wins, everything is just going to be, great. And that's not going to happen. Things are going to get worse no matter who wins. So the consolation, if Harris wins, she gets the blame, right? If everything collapses and she's there, she gets blamed. I mean, you can imagine what the media is going to do to Trump if this happens, a year into his presidency, and then we get this crash. It's all going to be blamed on Trump's policies, right? There's going to be no responsibility that's going to be laying at the feet of Biden or Obama or anybody. It's all going to be Trump's fault. But I'll admit, I've had this fear for the last several elections, always thinking that, hey, this is it. This is going to be the bag holder. This is going to be, where the buck stops. And we managed to get through another cycle. So it is possible that we can go another 4 years without a crisis. But I think the numbers at this point are just so great that the odds seem slim that that's going to be the case. Now, I've talked about the Trump trade, and part of the Trump trade, apart from Donald Trump going up and crypto or MicroStrategy going up, you've had bond yields rising. The 10-year now is at 4.3%. And people are saying that's because of Trump. Yields are rising because of Trump, because people think that with Trump we'll have a stronger economy and that's going to push up bond yields, or it's going to lead to more inflation. I don't think so. I think bond yields are rising because it doesn't matter who wins. Bond yields are going to go up even if Trump loses, because for some reason people have concluded that the deficits will be larger under Trump because of his tax cuts. I don't know, because they're going to be large under Harris because of her spending increases. Not that Trump's not going to increase spending either, but there's no reason to believe that a Harris administration is going to be more or less or more fiscally irresponsible, or that Trump's administration is going to be more fiscally irresponsible than the Harris administration. But regardless of who's worse, they're both going to be bad. The deficits are going to be higher. The national debt is going to rise under Harris or Trump in that 4-year period by an amount that exceeds the record amount that it's going to rise during the Biden term, which broke the record from Trump's term, which broke the records from Obama's, which broke the records from Bush, right? This is the trend. Every president outdoes the predecessor in deficit spending because the problem is exponentially growing. So bond prices are not growing up, down, and yields going up because investors expect Trump to win. It's because they expect somebody to win. It doesn't matter who wins. And I think that's the same thing with gold. Gold again today hit a new all-time record high. In fact, as it's trading this evening, I think it's up again to another record high. We're at 2,778. So we're only $2 below 2780, almost at 2,800. I said on my Friday podcast that I expected gold to hit a record high by Monday, and it took until Tuesday. I don't think we made a record high, although we might have. We might have made one overnight, I forget, but we certainly, just exploded to a record high tonight. Now, what's not at a record high is the mining stocks. Because of that big drop they had last week on the insignificant Newmont miss, which I've already discussed at length. But the GDX, which is the major index of gold mining stocks, still has to rise 5%, more than that, from here to get back to last week's high, even though gold today is higher than it was at any point last week. That was a huge shakeout. Probably a lot of people that got into gold stocks, unfortunately, got shaken out, and they're going to miss this huge bull market. I mean, the gold stocks will make new highs soon. And they're a great buy. I mean, as good a buy is on gold and silver. And I was stressing that again on the last podcast. In fact, silver is back above 34 again. It's almost 34.50. Still haven't taken out 35. We got close last week. And so silver had a bit of a bigger pullback than gold. And so while gold made a new high, record high, silver hasn't taken out last week's high yet, but it probably will. My guess would be silver will take out $35 this week. Maybe it'll take it out by a big number. And I think the rally would actually be bigger based on this weak economic data if the markets didn't expect Trump to win, because weak data is actually good for gold because it leads to bigger deficits and rising inflation. But the gold stocks are the buys. Again, I would encourage people to be buying these stocks if you are a risk taker. I mean, if you're a very conservative investor, if you can't afford to lose money, then gold mining stocks are not for you. But if you're willing to take a risk, I can't think of a better risk-reward situation out there than the mining stocks. So take a look at the Euro-Pacific Gold Fund. You can find out about it on my website, europac.com. You can buy it no load at any of the discount brokerage firms I've been talking about it. Some of the stocks that did hit new 52-week highs today were the streamers, Franco-Nevada or Cisco. Those were a couple of stocks that we own. And I thought that the bad news out of Newmont might have gained some attraction for those royalty companies because they don't take the cost risk. They just get paid off the top line. They get a percentage of revenue, so you don't have to worry about costs going up. And so I thought that when I saw the weakness in Newmont, that might cause some of the gold investors to want to, mitigate those type of surprises by moving money into the streaming companies. And I think they're just starting to go, or Cisco is at an all-time record high. Stock's never been this high in history. But Newmont, Franco-Nevada is still well off its record highs. And so that's a great buy here. I think I own both those stocks. I've owned them for a long time, and they've done very well. But they're going to do, I think, better in the short run because people are not worried there about the cost surprise. But I think one of the things that I think is significant, and of course the media paid no attention today to gold's record high. I guess since gold makes a record high every day, it's not news, right? It just keeps going up. What's more important than gold's record high is what it signifies, the warning that it's sending. And that also is falling on deaf ears and nobody is talking about it. But MicroStrategy stock has been on fire. It's at an all-time record high again today. MicroStrategy has a market cap of $51.7 billion. Actually, it's in after hours trading. It's up again. So it's maybe $52 billion or more. MicroStrategy's market cap is larger than every gold mining company in the world, except for Newmont, which has a market cap of only about 5% higher. So probably before the end of the week, MicroStrategy's market cap will exceed the market cap of Newmont Mining, the biggest gold company in the world. Now, MicroStrategy barely produces anything. I know there's a software business buried in there somewhere, but it's tiny. All they do is borrow money to buy Bitcoin. So they really produce nothing and they have no earnings. Now, I know Michael Saylor likes to talk about their earnings, but they're not actual earnings. They're just Bitcoin going up, right, on paper, right? But they're not generating any actual earnings. They're just leverage play on Bitcoin, yet it's worth more than a company like Newmont that's earning, $3.5 billion a year and paying out real dividends and using those earnings to buy back stock. And they're producing a valuable commodity, gold, and they have massive reserves of that valuable commodity. MicroStrategy doesn't have anything. But what I think is significant, one of the reasons probably that the gold stocks are as cheap as they are is I think a lot of investors who might be buying gold stocks are buying Bitcoin ETFs and MicroStrategy instead. I think that's where a lot of the demand is coming from because investors only have a certain amount of money. And so if they decide that they're going to use their money to buy MicroStrategy or to buy Bitcoin ETFs, what would they have bought with that money if they didn't buy those stocks? And since the way Bitcoin is marketed in the financial media, it's gold. It's gold 2.0. It's digital gold. It's better than gold. It's the future. Gold is the past. Gold is worthless. You would think that people are buying these stocks instead of buying gold stocks. A lot of people thought, that Bitcoin would eat into gold's market. It's not. I mean, Bitcoin is still nowhere near, even though it got close to a record high today, above 73,000. It's still nowhere near its record high from 3 years ago, priced in gold. It's still down about 30% from that peak price. People thought maybe Bitcoin will take demand from gold. It may have taken some demand from gold, right? Because we saw a lot of liquidations year to date out of the gold ETFs, but it hasn't stopped the price of gold from going up, because the retail buying is a small piece of a big pie when it comes to gold. Right now, the big institutions abroad, foreign central banks, they're not buying Bitcoin, right? Even though a couple of sovereign wealth funds bought MicroStrategy just because it's a momentum play. But the central banks aren't adding Bitcoin to their reserves. And I think a lot of the foreign demand in the physical real market, you still have a lot of gold. But where I think Bitcoin has had an impact is in the mining stocks, because there it's a whole different group of investors. The people who are buying gold mining stocks are very different than who's buying physical gold, right? None of the central banks that are buying physical gold are buying mining stocks. Now, they probably should. In fact, that would be smart for them to do that, because if they bought some of these mining stocks, they would own all the gold that's in the ground. And then when those companies mine it, they wouldn't sell it. They would just bring the gold out and just put it in their vaults, right? That would be the smart play for a foreign central bank, right? Instead of China buying up a lot of gold, they should just buy up a lot of gold mining companies, and they'd end up with a lot more gold for a lot less money. But they're not doing that right now. But the people who normally would be buying gold stocks are buying Bitcoin ETFs or MicroStrategy instead. So that's where I think you've seen the impact. It's not on the price of gold. It's on the mining stocks. That's one of the reasons that they are so cheap, is because the investors who would otherwise be buying these stocks are not buying them, because they're speculating in these other assets. So that's also keeping these stocks cheap, and I think it's going to reverse. Now, if Donald Trump wins, if Trump loses, I would expect to see a big sell-off in Bitcoin and MicroStrategy. Everybody believes that if Trump wins, this is going to be the greatest thing for Bitcoin, because, we might have a Bitcoin reserve. Trump's going to be the Bitcoin president. Trump has made a lot of promises that he can't keep to get elected. And that's not unique. That's pretty much par for the course when it comes to democracy. And I think one of the broken promises is probably going to be about Bitcoin. And so I don't think that the U.S. is going to be buying up a bunch of Bitcoin and putting it on the balance sheet of the United States. And I still think there could be a lot of regulation coming that's not going to be welcomed by crypto. Unfortunately, I'm not in favor of that, but I think that's just the trend coming. And so I think if Trump loses, you would expect a big collapse. And that might free up some money to go into the gold mining stocks and the silver mining stocks, as money is coming out of Bitcoin ETFs and MicroStrategy. Obviously, Donald Trump's stock would plunge if Trump loses. But the thing is, if Trump wins, I still think that you get a sell-off in like crypto, because I think then it's a buy the rumor, sell the fact. The question is, if Trump wins, will Bitcoin dump right away, right? Or will it have a rally and then roll over? It's hard to say, but it seems like so much money has come in to bet on this trade that people are going to want to take profits. I mean, that's generally how this works. And in fact, I remember when Trump won the first time and nobody expected him to win, everybody thought that if Trump won, the markets were going to get killed, but nobody expected Trump to win. And that never made sense to me. I don't know why people think Trump is so bad for the markets. I thought Trump was better for the markets than Clinton. And when Trump won, surprisingly, initially the market sold off, but then it was a huge rally overnight. By the time the market opened, it was a huge rally with Trump. So this time, it could be the opposite. Everybody expects Trump to win, and the market is already rallying based on that expectation. And so, we could have a big sell-off because the only way that Trump is actually going to be able to turn the economy around is if he does things that will make it worse in the short run. But that's just not going to happen. That Trump is not running on an austerity and then things will get better platform. It's things will get better immediately. Our best days are ahead of us. Everything is going to boom. Everything's going to be great. All we need to do is replace Harris with Trump. And that's not the reality. I mean, there is a house that needs to be cleaned. It's a big mess. But if we just do more of the same, which is really what Trump is promising, well, we're going to cut taxes, right? Well, I mean, we've cut taxes before. Presidents have cut taxes. Problem is they don't cut spending. And the deficits go up, inflation goes up, and the economic imbalances get worse and worse. And the other thing that they get wrong on this Trump trade is when they somehow link growth to inflation, thinking, oh, bond yields are rising because the economic growth is going to lead to more inflation. No, economic growth actually doesn't lead to inflation. It actually puts a lid on prices by increasing supply. The market is delusional and ignoring the reality. Bonds are not rising because people are worried that the economy is going to be too strong. Bond yields are rising because the deficits are too large, and they're going to get larger no matter who wins. That is the reality. So bond yields have a long way to go up. I mean, the markets are surprised by the increase. So far, the rising bond yields continue to push the dollar higher. And I think that's another trade to fade because rising bond yields are not good for the dollar. As much as people want to believe that they are, they're just not. Not if they're rising because of concerns over the solvency of the United States, that inflation is going to be much higher. That is bad for the dollar. That is eroding away the value of the dollar. And as I mentioned on the last podcast, we just had that BRICS summit. And even though they didn't come out with a new currency, they made it clear that their goal is to move away from the dollar. Their goal is to transact more in local currencies. That's why they're buying gold. And as I said earlier, when we have a record merchandise trade deficit, we've never been more dependent on imports. And the only way we can pay for imports is with a artificially high dollar. And Trump and very cavalier, oh, we're just going to slap all these tariffs on all these goods. Tariffs will never be more painful for Americans than they would be now, because Americans have never bought so much imported stuff as they do right now. And so if you put tariffs on that stuff, right, it's going to be more painful. I hear the Democrats saying, oh, Donald Trump's tariffs are going to cause inflation. They're not going to cause inflation. His deficit spending will cause inflation, but not the tariffs. Right? Yes, the tariffs will make goods more expensive. All the products that are subject to tariffs will go up in price, whether they're imported or not, right? Because if you're an American producer and now foreign prices go up and you produce something similar, well, you can raise your prices, right? Because you have, less competition. But in most cases, there is no domestic substitute. We're buying an import because that's all we got. That's the only thing we have to choose from. We can either buy something from China, or we could buy it from Indonesia or Japan or South Korea or something like that. But there is no American product to buy. They're all imports, right? And so if there's a tariff on those goods, yes, the price is going to go up. But it's just a one-time event, right? If the tariff is 20%, then yes, you mark up the price 20%, and then that's it. It doesn't go up 20% every year. It just goes up 20% one time. And then that's it. Then the subsequent years, it just goes up by, whatever inflation happens to be. So it's a one-off effect. So it's not like a rise in inflation. But also what people don't understand is if Americans have to pay higher prices for the goods that are subject to tariff, and they actually pay those prices, then they must buy less of something else. People don't have an unlimited amount of money. And so if I pay more for some goods, I have to give up other goods, or the price of other goods has to come down. So what's likely to happen if goods prices go way up because of tariffs, services may come down, right? Because obviously they're not affected by the tariffs and they are produced here. So let's say I now have to spend more money to buy a lot of things that I import. Maybe I buy them and I don't have enough money left over to get a haircut. So maybe I won't cut my hair. I'll get one of those Flobies, or I'll let my wife cut my hair because I can't afford a haircut now because the tariffs took too much of my income. Well, maybe the barber maybe he notices that there's fewer people that are making appointments. So he's got to cut the price of the haircut in order to offset the fact that people have less money because now they're paying these tariffs. So, some prices go up, other prices go down. It's a net wash. But obviously, the American consumer is worse off because he gets to buy less stuff. And Americans, the barber is worse off because his customers are spending so much money on tariffs, he had to cut the price of a haircut, right? So it's not like something that Trump is selling us that we're going to put these tariffs on goods and, the Chinese are just going to pay. And that's going to enable us to get rid of the income tax and all that. It is not going to work that way. Again, I prefer tariffs to income taxes. Unfortunately, we can't go back to tariffs and not income taxes because the tariffs would have to be so high that they would be unworkable. The only way we can go back to the type of tax system we had before the income tax is to get the government to be the size that it was before the income tax. And that is a fraction of its current size. Before the income tax, the government spent less than 2% of GDP, the federal government, and now it spends 24%. And one of my podcast listeners pointed out, and because I didn't mention this last time, I didn't even talk about state and local governments. If you add all levels of government together, you're at 45% of GDP is being consumed by government, because prior to 1913, state governments didn't spend very much money either. I think maybe all totaled, all government at all levels was still under 5% of the GDP. So government is enormous now. And one of the reasons that it's so big is because of the income tax. It's because they have a way to directly reach into our pockets. They take our money before we get it. They withhold the tax from your pay before you even get a chance to see the money. It's only because they have that direct tax system that the government was able to get this big. That's why the founding fathers wrote the Constitution to basically make it so difficult for the federal government to collect direct taxes. They assumed it would only happen during wartime because it was so difficult. They thought the federal government was going to run on indirect taxes like tariffs, right? But now when we have an enormous government, it can't be financed the way the founding fathers envisioned because we don't have a country. We don't have a government that's anywhere near what the founding fathers envisioned. That is the problem, right? And if Trump really wanted to make America great again, we would try to go back to that country. But, you can't make an omelet without breaking eggs, right? There's a lot of stuff that's going to happen, a lot of short-term pain to get to the long-term gain. Now, it's worth it. It's way worth it, but not for the politicians. They don't want that, right? They want to take credit for the good stuff, right? They don't want to be blamed for the bad stuff. And they don't want to be out there saying, listen, you got to swallow this bitter tasting medicine because, it's going to cure you. They just want to say, no, drink this. It's delicious, right? I made it. It's great. Everything's going to be perfect. And so that is where we're headed. One thing I wanted to mention before we end the podcast. Tomorrow is the 30th of the month. And that means it's 28 months, 28 months, almost a year, 2.5 years since the Puerto Rican government shut down my bank and put it into receivership. 28 months. And not one penny has been returned to a single customer of my bank. Now, how is that possible for a bank that never made any loans, right? So none of those deposits were ever loaned out. They were all sitting there. The bank had no debt, right? The bank never borrowed any money. So it had a clean balance sheet with no debt and no other assets on the balance sheet. I mean, yeah, there's some, intangibles, equipment, software, stuff like that. But as far as investments, nothing on the balance sheet but cash. That's all the bank had. Yeah, some of it was euros, some of it was dollars, some of it was pounds, some of it was, but it's all cash. Right? And so all you had to do is send it back to the customers. And it's been 2.5 years and nobody's gotten anything. The only one getting money is the receiver who's getting rich. Every month he takes money out of the bank. We're working on it. We're working on it. I mean, this is a what's the word I'm looking for? I don't know, but it's a slush fund for this guy, right? It's a cow that he keeps milking and milking and milking. The last thing he wants to do is return money to the customers because then he's out of work, right? So his livelihood depends on perpetuating this liquidation process. So the longer he holds on to that money, the more money he keeps for himself. But again, the worst part of it, and I continue to build out the website. It's a work in progress at 9fraud.com, but there's already a lot of stuff on there if you check it out. But I'm working on it, and it's going to get a lot better over time. But the worst part about it is none of this had to happen. None of this had to happen. 28 months ago, all the OSIF commissioner had to do, Natalia Zakaria, all she had to do was approve the sale of the bank. The documents to sell the bank had been on her desk for 7 or 8 months. She had fully vetted the buyers. They were going to add $8 million in capital. That was a requirement of the deal. She approved the sale. They put in $8 million of capital. Right? The bank had about $2.5 million, so that would have given it $10.5 million. It was about twice as much capital as it needed to be above the standards. But the standards were written for banks that made loans. Mine made none. So I had the most solvent bank in Puerto Rico. If any bank deserved to be in receivership less, it was my bank. And all she had to do was approve the sale. But instead of approving the sale, she said, no, let's put the bank into bankruptcy. Let's put it into receivership. Had she approved the sale of the bank, none of the customers would have noticed. I mean, they would have changed the name of the bank, which was, part of the reason I was selling it. And they would have improved the services because they could have offered the services that I could no longer offer because of the false allegations of money laundering and tax evasion. But she didn't do that. She put a completely solvent bank into receivership and sacrificed thousands of innocent customers for no reason other than an ulterior motive, right? What was the motive? Why did they do this? And in fact, after the bank was put into receivership, within a few months, another buyer group came up that wanted to buy the bank. They came to the commissioner and said, hey, that bank that you just put into receivership, we want to buy it. And they were going to pay me too for the license, but they wanted to buy it. And the group was head by a former commissioner of OSIF, which is the regulatory body of in Puerto Rico. They wanted to buy the bank. They had tons of money to buy that bank. And then, no, nobody can buy this bank. We are liquidating this bank. Who would do that? What bank regulator would turn down offers to buy the institution, infuse it with capital, protect all the customers? Why would you put it into bankruptcy? The reason was because the IRS 3 months earlier, which I found out in the only part of my FOIA request that wasn't redacted, and I have a lawsuit right now against the IRS to force them to turn over the documents. But the IRS convinced the Natalia Zakaria not to allow the sale of the bank, but to put the bank into a receivership. and hold a press conference, which was something OSIF has never done. The only press conference that OSIF has ever held in its history was the press conference to announce the closure of my bank. She made up a pretense and said we were closing it because it was critically insolvent. But even if that was true, if you're closing a bank because it's insolvent, why have a press conference? Also, she agreed to close it down 3 months before she held the conference and didn't tell anybody. So if you decide in March that you're going to close a bank in June because it doesn't have enough capital, why don't you contact the bank and say, we're going to shut your bank down in 3 months because you don't have enough capital. Maybe you should put some capital in and we won't have to shut it down. No. She never contacted the bank to tell me to add capital because she didn't want me to add capital because she wanted to use the low capital as an excuse to shut it down. But what's even worse is that a few months before that, I sat in her office and offered to add $7 million in capital. And she told me not to do it, that there was no reason that we could wait for the buyer to put it in. So she knew that I was ready to add capital, decided to shut down the bank. No, she knew I wanted to add capital. She told me not to do it, but she knew I was willing to do it and I had the money. Then a couple of months later, she decides to shut down the bank for not having enough capital, but to postpone that for 3 months. And during that time, she didn't contact me or anyone at the bank to say, you need capital. And if it was an emergency, right, they shut the bank down. They said, this is an emergency. We have to protect the customers. Well, if they knew about it 3 months earlier, why'd they wait 3 months? It's like if a house is on fire, you don't send the fire trucks 3 months later to put out the fire. Why did she sit on it? Because she knew there was no risk to the bank. The reason they waited 3 months is because they wanted to coordinate the press conference because it was the 4-year anniversary of the formation of the J5, and they wanted to use shutting down my bank to commemorate their organization and claim it as a success. It's actually the only enforcement success of the J5 was their failed investigation of my bank. So that is the reason that the bank was shut down. It was all a press conference. So the chief in the UK, the chief in Australia, the chief IRS in the US, they can all take credit. They can all go on television. They can all put out press releases and tell people, look, we found this bank that was laundering money and evading taxes, and we got it shut down. So see, we're doing a good job. We're cracking down on tax evaders and money launderers. And the proof is that this bank in Puerto Rico got shut down, right? Even though it wasn't shut down for doing any of that because they didn't find any evidence of any of that. So they had to pretend. So the whole thing was a sham. I don't know that you can ever find a greater example of abuse of power and obstruction of justice than what happened to the bank. And again, it's not just to me, it's to the thousands of customers, including one who months ago committed suicide over the financial stress that came out of this. And in fact, my partner in the bank, Mark Anderson, died of a heart attack, a couple of years ago, as I think because of this. I mean, his heart was bad, but I think part of the reasons it was bad was because of all the stress, and all the added stress might have caused that fatal heart attack. But anyway, I just want to point out that tomorrow is the date, which is the 28th anniversary. 2 more months, and it'll be the 30th. But I do have another big announcement that I will be making with respect to this situation. I just don't want to let the cat out of the bag yet. But stay tuned. I do have some new news that will be coming out with respect to the actions that were taken by corrupt politicians against my bank. So I'll be bringing that news as soon as it's official. Anyway, that's it for now. I'm going to be back with another podcast on Friday because we're going to get the non-farm payroll report. And so I'm going to try to do a podcast very close to the close of the market. Anyway, if you had to enjoy the podcast, don't forget to put some comments in it, like it, give it the thumbs up. And again, I've been ending a lot of these podcasts by encouraging people to sign up for our free newsletter at schiffsovereign.com. Excellent content coming out on a weekly basis, 2 or 3 issues every week in your inbox. Lots of insightful information that you really don't find anywhere else. So you can get that all for free at schiffsovereign.com. Bye for now.